What's up, everybody? Welcome to the Stocks channel. On Friday, the stock market bounced higher even after the bearish engulfing candle, and now we need to understand whether we're going higher or this was just a dead cat bounce before we go lower. So first up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So Friday in SPY, we were up 1.04%, and we did bounce to the location that I was expecting, which was going to be this resistance zone between 518 and 520. And we did go a bit higher than 520, but as you can see, sellers did show up at that level and we did start to pull back. Now, very quickly, I want to show you the progress of what we are doing in the Discord server and the performance that we are currently seeing. And right now, my year to date for my trading account is at 36.09%. And you can see we are at very nice all-time highs closing here. So being up over 36% when none of the indices are even up 10% is significant outperformance. And the way we are able to do this is simply by following what the charts are telling us to do, whether that's go short, go long, or sit in cash until we have clarity. And then obviously getting in the best trades available. And this is why I've been telling you it's a stock picker's market, because the indices really haven't been going much of anywhere. But as you can see, the trading account does continue to go higher. And if we look at this performance as our accounts are growing and we close this out and we look at the indices really have not gone anywhere, going all the way back towards the end of February and the beginning of March. So this is why I personally like trading, because I do think when you get in a range bound market, it can be very frustrating if you're an investor, especially in a bear market when the market's going lower and you're just churning around and not seeing any profits. So trading is worth the time if you do focus on getting good at it and understanding how to manage risk. And that is why I always talk about these principles during the videos about managing risk and getting in the best risk reward setups with the best odds and the best probabilities in your favor. So just a quick recap, I told you we weren't getting bearish if we gapped up, and of course we did gap up, so there was no reason to be bearish on Friday. And as you can see, it was a very bullish day, all things considered. Now, bullish day doesn't mean that we need to stay bullish. As you can tell from the arrow, we can get rejected from 520 and still come down here towards 507, which would be a very solid test of that rising 50 EMA. So I'm not ruling this out. I do think this is a very preferred scenario, but it doesn't mean we can't push higher to a brand new all-time high. But I will give benefit of the doubt to the bears right now, because they did successfully get a double triple top rejection and they did successfully keep price down below 520 on Friday. So do not rule out the bears. If you're blindly bullish, I think you could get hurt here if we come down quickly towards 507 and you're over leveraged on longs. So just so you are aware, I went into the weekend in a very heavy cash position, and I'm going to wait until next week to see what price action does around this resistance. And it allows me to be very flexible when I'm heavy on cash, because I don't care if the market breaks above 520 and goes to a new all-time high, and I don't care if we continue this rejection and go down towards 507. Being in cash means I can react to what the price is doing on Monday, and I don't need to care if we gap up or gap down. And that's why being a trader, it is a very good thing to be unbiased and listen to your chart. And right now, this chart allows for us to go anywhere, because we are in a range. We can push back down to the bottom of the range, or we can push back to the top of the range. So going into next week in the Discord server, we'll be focusing on all of the best stocks, because we are in a range bound index and we're not really focused on trading the indices heavily. And that means there's going to be plenty of opportunities to short bad stocks going lower and go long on good stocks going higher. So keep that in mind. That's what I call the stock picker's market. When the indices are just churning around, we really want to focus on the best stocks to trade and wait for the indices to break out of this range before we go back to heavily trading the indices. So a critical resistance on SPY will be 520, and the range high right around 524 and 525. And if we get rejected from 520 and break down below this support, which is the bearish engulfing low right around 512 to 513, then we will be looking for the bottom of the range push to 507. So below 513, we're going to 507, and above 520, we're likely going to 525. And until we break out of that range, we're trading between 512 and 520. So trade that range and then the breakout, and you should do very well. And it's a very good risk reward ratio to go short near the top of the range and to go long near the bottom of the range. On the Nasdaq 100 triple Qs, we were up 1.18% on Friday, and we did very much what I drew, which is that we would bounce towards the resistance right around 442.6, and then we could get rejected and come all the way back down towards 428 and a gap fill right around 425, or at least the rising 50 EMA right around 434. So the critical support in the triple Qs will actually be 434, but if we get there, we will break down below the bearish engulfing low, which which is at 435. So this will be a very critical zone between 434 and 435. Below that, we should come all the way down and finally fill the gap right around 425, or at least test that support at 428. The critical resistance we need to break will be above 442.6, and then we should push all the way back to the top of the range right around 447 to 448, or make a brand new all-time high right around 453. So watch that critical resistance zone, which is where we did get rejected on Friday, and if we break above it, you will need to start getting a lot more bullish. On the Dow Jones, we were up 0.74% on Friday, and we also bounced up towards resistance, which was right around 391, and we did bounce off of this support, which is going to be between 385 and 386, so do not get bearish unless we start to break down below 385, and then we will likely go to 377. Above 391, we do have a gap to fill just below 395, so above 391, we will be looking for 395, and if we can push out to a new all-time high, the price target will be 400. On the Russell 2000 IWM ETF, we were up 0.33% on Friday, and the Russell 2000 did get rejected from all of these negatively sloping moving averages, which is a resistance right around 205.5, but we are still above support between 201 and 203. So I treat the IWM as a range between 201 and all the way up to about 207. Above 207, I think we see 214, and if we break down below 201, I think we come back down towards 196. On the ARKK ETF, we were down 0.32% on Friday, and if I move this down, this is the neckline for this double or triple top, and you can see that we did get one daily close down below it, which is that support right around 47. So if we continue this trend on Monday and we continue to hold down below 47, there's a very good chance we come down towards 45 to 44. This is a very clear double or triple top rejection as we are starting to break down below 47. So just keep that in mind, but if we can hold above 47, then we're simply just at the bottom of the range and it's still possible we push higher. If you want to get bullish on ARKK, you could either try to buy down near support with a low risk long entry, but because it's in a bear trend, I wouldn't suggest buying a falling knife. I would wait until we could at least break resistance between 49 and about 50.7. On the VIX, we were down nearly 2% on Friday, and the VIX did get the second day in a row closing above 15. But again, if this is a bull market, the VIX will crush back down towards 13. This is what the VIX has been doing all year long during pullbacks. We get a spike above 15 for a day or two, and then the VIX crushes back down and we continue the bull trend. So if this trend is going to change, we are going to see the VIX spiking out between 18 and 20, and that will be plenty of fear, which will lead to high volume panic selling, which means we should break those support levels that I gave you on the indices, and then we could see a deeper pullback. On Bitcoin, we're currently trading right around 68,000, and as I said before, we're stuck in this wedge, which is just a range of consolidation, and it doesn't mean we're going higher and it doesn't mean we're going lower. We need price action to break the direction of the wedge that is going to give us the next leg in Bitcoin, and the bull breakout will require a break above 70,500, and then we should push higher towards the price target at 75,000. If we break down below support at 65,000, then I do think we're going to see high volume panic selling all the way back down to 52,000. So you can stay bull above 65,000, but if we break below it, you need to get risk off, or you can wait to get bullish until we break the high right around 70,500 to 71,000. But keep in mind, if we do break that range, we're likely only just going to 75,000 before we find more sellers. On Nvidia stock, we were up 2.45% on Friday, and I told you if we broke down below support at 857, then we did have a confirmed double top, but as you can see, we did not break down below support and we did get an inside day. So starting on Monday, if we break down below 857, do expect to see the gap filling at 823 and possibly a push down towards 800 at the rising 50 EMA. If we don't break down below support and we break Friday's high right around 885, then we push back to the top of the range between 927 and about 950. On Tesla stock, we were down 3.63% on Friday, and as you can see, we are following that arrow from the rejection down below 173, but there was a major development after the close on Friday where we did get a tweet from Elon Musk that we were going to see robo-taxis unveiled on August 8th, and Tesla is doing very well after hours on that news, so there is a very good chance we don't see the bottom of this range at 154 or down here right around 160, which means we will likely have to delete this arrow. If we start to break above 173, there's a very good chance we're going all the way up to 187. So just keep that in mind. Above 173, I am bullish on Tesla, and we could see above 173 very early in the week, and above 173, I do expect to see a push towards 183 to 187. So I think we need to revise this downside target because we likely won't get there, but we can wait for price action confirmation above 173 before we start to get bullish. On Apple stock, we were up 0.45% on Friday, and Apple is building a very strong base of support at 169, which I think increases the probability this could turn into a giant double bottom on the daily chart, which means I am absolutely not changing anything about my arrow that told us we would likely go to 187, because if you look at this price target, if we double bottom and we break the high at the neckline, that is easily going to get us to the price target, and I think that's just coincidence. I didn't plan on that happening. I thought we would go to 167 and then start the bull trend, but now it's starting to look like we're going to double bottom off of 169, which means 169 is your critical risk level. And because we closed right next to the critical risk level, that means this is a very low risk long entry. That means Apple is very attractive at these prices. It's very low risk to go long, and I think that is going to lead to the next bull rally in Apple stock. You can also look at earnings, which is out here in very early May. So this could be a very simple pre-ER run up, which could easily take us to 187 before the beginning of May. So I'm bullish on Apple as long as it can stay above 167 and 169. And if it can't stay above those levels, then we will need to manage risk because it could be coming back down towards 158. So jumping back over to the S&P 500, we are absolutely crushing this market by simply just staying objective and following the chart and managing risk very well at the critical risk levels and putting ourselves in the highest probability chance to make the best trades with the best risk reward ratios. We're going to continue to do this all year long, and as a result, we will continue to crush the market all year long. So if you want to come crush the market with us, come join us over at the Stocks Channel Discord server. You'll get access to all of my intraday updates and technical analysis, as well as my trade ideas, and you could come learn how to be a very disciplined price action trader that knows how to crush this market. As I showed you in the introduction, I'm currently up over 36% year to date, and we don't even have any indices that are up over 10%. So if you want to come trade with me, come join the Stocks Channel Discord server, and you can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.